Good morning, traders. This is Perry Wilkie with StartupTrading.com. It is 9 minutes till 9 a.m. Eastern Time on Thursday, September 26th. So, looking back at yesterday's session, right, just another session, uh, really going nowhere for the NASDAQ and the ES. And then we had the Dow and the Russell, getting sold down. Uh, Still just up here in this balance area for the ES and the NASDAQ at the end of yesterday's close. Uh, and then we had some poor structure for the Russell and the Dow. Some excess in A lines, meaning you really have to be cautious taking shorts above those levels uh, once we get above there. Uh, and then as we look at the news today, and we've been covering this all week on and off. Uh, we had three prints of news this morning basically all come out in line. Durable goods was probably a little bit better than expected. Everything, final GDP was right on the money. Unemployment claims were close as bad as the revisions are for unemployment claims, and as much as they really can't figure that out for a government report, it was like spot on. It was well within the margin of error. Um, so we have, if you look at what's on the tape today, we have, what looks like a bunch of Fed head speakers. But if you look, and I've tried to, handicap these for you a little bit, but you've got the first one at 9:10. It's over financial inclusion. Anytime that there's a chat, right, someone could throw out another question that has nothing to do with the topic on hand. That's why anytime there's a chat or audience questions, it's highlighted yellow, but the topic is green, meaning it should not be any impact for the market. And then at 9:15, we're going to have, for the third or fourth day this week, we're going to have someone giving economic outlook and monetary policy, wisdom. These guys have to earn their dough for their jobs, but do you think after Powell's speech last Wednesday and then the speakers that we've had already this week giving economic forecasts that there's going to be something earth-shattering in this? My guess is not. Uh, and then at 9:20 we have Jerome Powell. It's just going to be a pre-recorded video. It's not going to be live. I'm sure that there's already been leaks of this video somewhere. Would be my guess is that it's not going to be the first time someone's seen it, although it's probably supposed to be. And I'm not even sure what the topic is for where he's at today. But again, do you really think that they, let him speak, that he spoke last Wednesday, and then you got the speakers Monday, Tuesday, Wednesday, the ones that are, coming out even this morning, and do you think he's going to, say something that contradicts everything that they've said in the last week? No, that's not happening. That's not how they roll. So does that mean there might not be some volatility around there? Well, isn't there volatility normally around the open of the market every day, anyways? Especially when you have a 1.5% gap up, there's going to be some shenanigans. So my advice to you would be just be flat while this video is on. It wouldn't hurt to be flat, by about a quarter after 9 at the latest, and probably until, you know, for at least a half an hour, till at least a quarter till 10. And then we just have pending home sales at 10. And then as we, scroll down, we've got, another, some other stuff. But topics are supervision and regulation is the next speech, then artificial intelligence and workforce development. Again, these aren't anything. The one wild card for me is Yellen is going to be speaking at a U.S. Treasury market conference. I really don't know how to take that. I would think that to be honest with you, it could be a non-event, but this one I don't really know how to handicap at 11:15. This is about 15 minutes before the Euro traders come in. Maybe there'll be some type of a reversal, coming out of this, just on an intraday, trend or whatever. But I wouldn't think this is going to set the tone for the week, but this is a wild card to me. I really don't know how to handicap this whatsoever. And then we have another one for financial inclusion, another one artificial intelligence and the labor force, and then tomorrow morning is our big event. Uh, for the week as far as new information coming into the market, which my guess is it will probably be in line, but I don't know. And you should be flat before this news print at 8:30 tomorrow morning, and you should give it at least 10 to 12 minutes before you re-engage the market. Is my advice to you on that tomorrow. And then, that really rounds out the week. Uh, Tonight or last night after the bell, we had Micron. I didn't look at their tape, but that is a sentiment read, right? Semiconductors are, you know, global supply and demand. That's it. So I think I beat that up a lot more than I normally do on, news for the day. So as we look at where we're at, we had that huge move overnight. Uh, you know, Dwarfed yesterday's range. We're up 1.6% on the Nasdaq. Uh, we are up, 0.8% on the ES. And if we look at the Qs, right now the Qs are trading uh, 493.64. So we're all the way up in here. And in my opinion, the Qs aren't going to be the driver of the market today. It's going to be the SPX, and that's why the title of my video is SPX 5750. And we'll get into that. So I would think that 490 should be support if we get down towards there, and we'll have to see. If it's not support, you're just going to fly through it. But we have to expect that if we get down to 490, and keep in mind, if we trade 490 at this point, that is almost 150 points lower than we're trading right now. That'd be a 150 point retracement. The NASDAQ is currently up 325, so that's probably not out of the realm of possibilities. Uh, when that happens or whatever, it could be just a closing print. We'll have to see. And then, the big round number would be 500, right? For some reason, I'll just go ahead and throw this out there now. For some reason, if we were to get to 500, you should just flatten and get the hell out of the market. If you go up another 200 and 50 points from where we're currently at for the day, uh, you should just be out and, thank the trading gods and, don't try to reverse it from there. You could get a hard reversal off of that level, but I think playing for it would be a fool's game if we go up another 250 points. Uh, Looking at where the SPY is trading 574 65. So just under 575. And you can see for today, that's right, that was within the realm of possibilities. 570 to 575 was right in the little window uh, that was pierced out and, made available to us. So you really have to, I would think that 577 should be the lid, but if we look at, tomorrow's expiration, you can see there's some gamma on 580. And then, so let's get to the crux of the matter, and for this, we have to scroll down a little bit. Uh, Monday, September 30th, is the quarterly expiration. This is where this JPM short call strike is. There are, almost 50,000 of these short calls out there, uh, meaning that once they get above this, they start losing money tick for tick, right? Not only are they uh, not making money on their hedge or their hedge was a non-factor, they're actually losing, right? This is like the same as if you're, just losing your ass. You're losing your ass every single tick above this position for where they put on that strike. So the market makers are going to love trying to keep it above 57.50 and just take all the money that they can out of here. They've got to keep it up. Today's the 26th. We're talking about next Monday. Today is Thursday, so you got a few more days you would have to keep it above there. So keep in mind, this is going to be a major pivot between now and Monday's close. Uh, if you every time you cross this, right, it should be acceleration one way or another. And that's, we couldn't get over this during the trading day, right? While all the players were involved in the market. So what did they do? They took it up, they snuck it across that line overnight. Now that we're over it, you know, JPM would love to get it back on the other side of this between now and Monday's close, and we'll just have to see if they do. But the market makers would love nothing more than to keep it above this level. And the market makers, aren't locked into this expiration for this, right? They can do stuff to offset their books. They could lock gains in anywhere they want, and then hedge off themselves, right? So don't think that that's not a possibility. So, uh, but anyways, that's the level that you're going to want to watch. Right now, the uh, the cash closed at, let's just call it 57.25. Let's just say that we're up 45 points in the overnight session. So that would mean that we're basically 20 points above this level. So if cash open right now, we will be open around 57.70. Uh, and then we'll have to go from there. So I beat this up a little bit for you. So we are on a look above, and we're just on a look above right now. This is the first candle that's really making progress above this previous. So we just have to see if this, can roll back tomorrow morning or tomorrow at some point in time. We could be back under 5,800 on the futures, and that would be, uh, probably get a pretty. We probably drop another 100 points, to be honest with you. If we go back under 5,800, you're probably just taking a beeline right to first the 57.50 in the cash, and then see if that holds or not. You lose that, you're dropping down to 5,700, and then don't even think that 5,600 is not out of the table, because it's totally on the table at that point in time. Uh, for between now and Monday, we could get some volatility. But like I said, as long as we're up, right, just play what's on the table. Don't play ahead of the game. If we're going to go down to 5,600, there's going to be lots of time to get into that trade. Uh, you know, as far as us day traders are concerned. Uh, so 20,250 is the base where the Nasdaq is, breaking out of this consolidation from. If you look at the last real leg start down, you're looking at 20,892, and then the ES is just on this all-time high. So again, you're looking at 5,800 on that overnight action, 48 points for the ES. And then if you look at it, we are already at level 4. So we could just, to be honest with you, this is a little bit tricky when we get up here. 7 days out of the year, usually you can blow out these level 4s into the close, meaning that you're not going to close back under here uh, for the day, right? That is on the table just to get a blowout, especially when the ES is making all-time highs. But the norm would be, right, and we play for norms here, that if you cross back under here later, or you get back down to it or near there, these single prints are what's on the table. And just think about it this way: if we open now, we're open up here around this 20,000, 525 or whatever. Uh, Even if we close today at 20,360, we're still up substantially from yesterday. We're still up substantially in any way you want to look at it, and and we'll just have to go from there. The Dow again. You want to see the Dow. If we're going to have where we blow out over these level 4s, I think it's going to have to be everyone buying everything, right? If it has a ticker, you just throw a bid at it. which means that the Russell and the Dow are going to have to get above these do not short above lines. So you're going to need the Dow to get above uh, this 45,529. You're going to need the Russell to stay above this 2242.7. And then we'll have to go from there. If they cannot sustain above those levels, chances are that we're going to get some floundering again up here. So again, my advice is at 20 after 9 to be flat for Powell. It's a pre-recorded video just because that's the time. So stay flat from like a quarter after 9 to a quarter till 9. Then you can do your technical analysis, re-engage the market, and see what happens. But we are overextended. If we're going to stay up and really get that blowout day, watch the VWAPs. You want to see the VWAP stay between the +1 and the +2 standard deviation lines and not really make any traction. You should not even touch the VWAP today if we're going to, really stay above this and get a blowout up and higher and really squeeze these shorts. If we trade the VWAP today, you're likely to close under it at the end of the day, in my opinion. I hope this helps. You guys have a great day.